right, what's going on, everybody? Chris Franks with Texas West Capital. Man, oh man, what a week it's been. I've been kind of out sick most of this week. It's been tough, or at least to the middle of the week anyway. It is just after 11 a.m. Central Standard Time here on Friday, the 4th of April, 2025. And man, oh man, we got stuff to talk about today. We're going to talk about the jobs report, the unemployment. We're going to talk about stocks. Man, I posted some things today, excuse me, about silver and oil, both dropping like 13+% in the last 2 days. Everybody's freaking out, man. Let's talk about that. Bitcoin, of course, which is held up in spite of it. And, you know, what that may mean as far as things going forward. So before we jump into it, do me a favor, my friends, hit the thumbs up, hit the like, leave a comment, all that great fun stuff, because, it helps me get out there. It helps get into the algorithm a bit. Y'all know I'm not really great on marketing, so I kind of rely a bit on y'all. Hopefully you don't mind. Makes you feel special and needed, maybe. But anyway, we're going to talk about all that stuff here today. And I don't know why, but man, looking a bit dark in here. I've got multiple lights on, but man, I am looking dark right here. So hopefully you guys can hear me all right and see me all right. Excuse me. Like I said, guys, I do apologize. I have been ill this week, and so I'm still trying to get over that. Trying to be, my normal excitable self. So yeah, we'll see how that goes, right? Bibbo, what's going on, buddy? You said you hear me loud and clear. Great. Let me give me a drink here real quick. Also, people, thumbs up, like, leave a message, share the link, guys. Share the link. Do me a favor. It takes like 2 seconds. Just share it real quick on your social media. Let other people know and let them decide. Maybe they like it, maybe they don't. But if they do like it, it's something they probably won't run into on their own, because, again, my marketing kind of sucks, right? Loud and cough, clear. Feel better. Thanks, Fibbo. Fibbo, let me ask you real quick while you're here, man. You're gonna be on next week, right? I'm gonna put you on the spot here in front of everybody, so we can get the answer locked down in the comments, and you can't change it. So let us know that you'll be with me next week. By the way, I know Fibbo recorded with Crowd. He does that every so often. He did that today, this morning. I guess that's going to drop this weekend. So make sure you guys check that out. It's always good. And Fibbo's going to be with me next Friday. So be sure you guys tune in for that as well. Also, one final thing, guys. I've been kind of teasing about it a bit. I've launched a publishing company. It's the first universe we're doing is Bitcoin fiction. It adheres to real Bitcoin, like white paper stuff. It's not some imaginary, you can do this with Bitcoin, you can do that, which you can't really. It's really, really cool. But I've got a main release coming out. We'll have our first mainline novel coming out. It's going to drop the first day of the Bitcoin conference. I'm still trying to see if I can make it out to the Bitcoin conference, but either way, that first book will drop then. It's called The Cold Wallet Protocol. It's like a espionage, spy kind of thing, thriller, techno, AI, all that fun stuff. But leading up to that, I have an anthology called Forked Nations, Global Collapse. And it's 7 novella, so they're, 22,000 words each. So, 50+ pages each. But anyway, we're going to release that this weekend. So if you guys are even interested in hearing about it and whatnot, go to forkednations.com. Let me see. I think I've got a banner set up here. You can do it. Just go to that email address there, forkednations.com, or email domain, and jump on there. Throw your email address in, and I'll let you know this weekend as soon as the site is live. We'll have social media, sites and everything else going live. So if you like fiction, if you like Bitcoin, my goal with this is to bring more people into Bitcoin, because, again, we do it here, in the writings, I do it here to white paper stuff. I also, a lot of it, especially in the Cold Wallet Protocol and subsequent books have to do with that, are based on things written in software. If you guys have not read that, you need to. I've got it. It's all the way on the other side of the office. but that's Jason Lowry, Major Lowry's book that he released, which looks at Bitcoin as a non-kinetic weapon, basically. And so really cool things in with that that I've used is that. So anyway, I think it's really going to be awesome, guys. We've got so much. This is not just one book or one anthology. This Forked Nations is going to be multiple anthologies. We've already mapped out. This is the first one. Like I said, it's got 7 stories in it, novellas. We've got, I think, 13 more, I believe we've got mapped out already. So this is going to be its own thing itself within the, we got what's called the protocol universe. And then of course, like I said, we've got that first book coming out in May. So, exciting, I really hope that it brings in more people into Bitcoin. And if you watch me on Beards and Bitcoin, we often talk about the way Bitcoin is likely headed. And I know Fibbo hates it. But if you guys think I'm very much a TradFi guy, you guys need to read this stuff I'm putting out. It's very much, the entire universe is wrapped around the questions of Bitcoin, sovereignty, decentralization, all these ideas. And so they're explored fully through all these different books and things we're going to have coming out over the next, 10 to 20 years. It's a long time thing, guys. It's a big project. So hopefully you're excited about that. Check it out. And if you do, and if you like it, let people know. All right. What is that author? Oh, Jason Lowry, Major Lowry. He's in the Space Force now. He wrote, basically he wrote a master's thesis on this. And then he released it as that book Soft War, which was then taken off. You couldn't buy it for over a year when soon after when he did it. You can buy it now again on Amazon and other places. But I believe the way it goes is Lowry had a scholarship through the DoD. And basically when you're doing that, what you're studying, the stuff you write is like actionable intelligence kind of ideas for the DoD. And so the Department of Defense. And so, with what he wrote in there, I believe that's why it got pulled for over a year as they kind of really digested, looked at it and what's going on and did whatever they need to do. But he's a major, like I said, in the, I believe he's a major in the Space Force now. So weird saying Space Force. I grew up in the 80s, 70s and 80s when Star Wars kind of came out and all these things were out. And so now we're talking about the U.S. as a Space Force. It's just kind of crazy saying it. Anyway, so that's what's going on there, guys. Okay. Fibbo says, I love the discussion for sure. I'm just an anarchist at heart, but love the show. Yeah. And, again, we're all very much, Bitcoin purists as much as you can be. We hold our own in cold wallets, but we're just talking about the way that the world is likely to go on Beards and Bitcoin. That's our Wednesday show, for those of you that don't know. And so, what we do on that show is we just kind of look at, well, this is the way things generally tend to happen with stuff like this in global finance. And this is the way it's likely to go, and this is why. Just to kind of get you guys prepared, but that does not mean at all that we're completely like, forget the, screw Satoshi, screw the white paper and all that kind of stuff. Not at all. Not at all. Bernardo says he's a Cardano maxi. He likes to suffer. Hey, Bernardo, you did not send me an email, buddy. You mentioned last week that you wanted to send me get in contact with me. So you did not send me one. You need to send me one, man. I was looking for it. So anyway, he says he likes to suffer, Cardano maxi. But anyway, check it out, guys. If you're looking for something else, kind of Bitcoin, and it's not like some stodgy, boring Bitcoin stuff. Like I said, very action thriller oriented. Very cool ideas with that. So that's that. All right, guys. So let's jump into this. First thing I want to talk about, we had jobs today, right? We had the jobs today. Jobs report came out. Let's see what they said. Here we go. And I'm going to get me down here a little bit so I'm out of the way and this kind of opens up a bit more. I don't know if you guys can see that. Whoops, hit the dang thing on the side there. Stupid thing. Let me see if I can get this to kind of zoom in. No, it won't, because it's in this kind of frame here. It's not allowing me to make it any larger. So I apologize for that, guys. But what it says here is that today's jobs number, let me come out here, non-farm payrolls, 228,000. They were expecting 135, so that's huge. That's very hot. Now, the thing to remember is last month, we had 151,000, which beat expectations. It was hot, but that has since been revised down to 117,000. So, it is what it is. It's part of the thing. I've talked to you guys about this before. It's not like some great manipulation by the government. It's just the way that they're able to, guess and pull these numbers. I'm going to say guess, but their methodology and whatnot, it's going to be constantly updated. So, it does, you'll get revisions for the first couple of months, I believe, and then like quarterly after that or something like that. So anyway, yeah, they got reduced, but huge to the upside today. Unemployment inched up again to 4.2%. It was at 4.1%. They were expecting 4.1%. Again, not a big deal, guys. Under 5% historically is considered fully employed. We've been at this like 4.1, 4.2 or lower level for a year plus, a couple of years, something like that. It's been like one of the longest runs in history. Significantly long there. I don't think it's the longest, but it's been one of the longest. And so, I see people like, oh no, unemployment went up. That's the end of it. Well, no. If it's bouncing around, 4%, 4.2%, it's nothing. It goes up from 4.1 to 4.2. That's nothing. It is still historically considered fully employed. So if you guys don't understand that, hopefully now you do, right? So yeah. Shy, is that Shy or Shay, SHAI, says the jobs report is suspect. Gig workers are basically working two jobs. A lot of people these days have two jobs. Yeah, but that's all put in there, if they've got jobs, right? And if it's full-time versus unemployed or versus part-time, right? Most people don't have two full-time jobs, right? And so, you have to dig into the details of all that. But the non-farm payrolls coming at 228 is not saying, it's not like, oh, we've got a whole bunch of people working two part-time jobs or something, right? We're looking at full-time employment. And again, some people kind of make it two jobs, but most people don't work two full-time jobs. So we have to be careful when we're looking at those numbers and the way we look at it, right? Fibbo says he has two full jobs. I can't even say it. Two full-time jobs. Y'all tell him stop lying. Tell him stop lying. He does post pretty often, though. That says revisions are probably just failing their drug test. Mark says, yeah, we are getting roasted in Canada. Going to lose 30,000 jobs. Man, something, right? Oh, okay. I see, because Christopher was mentioning Canadian March 2025 jobs came out today. Looks chilly up there. Okay. Yeah. So, as a matter of fact, we can look right here and we see the Canadian unemployment rate, 6.7%, guys. We're down here 4.2%. Poor Canada's got 6.7%. Not all that great. What do you got here? Yeah. So anyway, right? Andrew, yes, I'm trying to feel better. I'm trying to be more uppity here. Still a bit fatigued from the illness this week, but definitely working on it. By the way, real quick here, if you're in the group coaching, don't forget we're going to have that makeup class today at 3 p.m. Central, 4 p.m. Eastern. And of course, if you can't make it, that's fine. We always record, and put it in the sections there. But we'll make up from the class earlier this week that we missed when I was out ill. All right. So anyway, so that's what we're kind of looking here with jobs. Jobs and unemployment or whatever. So when we're looking at that, that's hot. That's hot, right? And you say, okay, well, why did the markets drop today? Because that's hot. Because the knee-jerk reactionary thinking is, if jobs are that good, if jobs are doing good like that, then the Fed has less reason to raise or to lower the Fed funds rate. And so that's kind of where that's why you're getting that knee-jerk reaction. But remember, these are knee-jerk reactions off news events, right? And if you take a bigger look, if you zoom out to the daily or the weekly, look at the RSI and the stochastic RSI. Resetting, basically almost reset. So, I honestly believe that our indexes are likely to be pretty damn close to the bottom, if not bottomed out already. We've got the yearly S1 pivot coming up a bit lower on some of them. So we could still see a bit more push. But I think if it doesn't bounce strongly today, probably sometime at the beginning of next week, we'll see some really good bounce for stocks, for the indexes there. So, yeah, be sure, people are gonna get all up in their feelings to their emotions today because again, silver dropped almost 13.5%. Oil dropped 13.5% over the last 2 days alone. Now, if you're in there with us, they're heading right to our targets. They're exactly where we're looking to go. As a matter of fact, oil with the drop this morning actually hit our whatever it was $60 and somewhat cent target. Now it could still fall, like I said, a little bit lower, but that was our initial target on the breakdown there. I've talked to you guys before about it. I think oil is probably heading up to or down toward like mid to lower 40s. That's my initial target to the downside. I've been talking about that for a while. So yeah, if you're interested in that sort of thing, I think that's where we're headed. It has little to do with what's going on with tariffs and whatnot, right? I mean, this is something I've been talking about for quite a while. When I was doing spaces all the time with Gary Cardone, we would talk about it multiple times during then, and that was months and months and months ago. So, no surprise here, doing what we're expected. I don't think silver and gold are topped at the moment. They're local tops, but I think they'll be, heading back up here pretty soon as well. I think, based on how they go, with today and the beginning of next week. But no surprise with them. The gold went up a bit further than I initially thought it would. But overall, hitting targets to the upside and then getting the move back down to the downside as expected. So really not too bad off in there as well, okay? Christopher says, I bet my next paycheck that Monday morning is the bottom. Ooh, how much is that paycheck? Maybe we can find a bet where I can make me some money. No, I'm kidding. Anyway, so yeah, again, the main idea of the show today is really just to keep you guys from freaking the hell out, man. Because, that's what people tend to do. And if you're online, which y'all are, right? Y'all are all over social media, right? Except for maybe Mark. Mark's not a big social media guy. Him and his funky bunch, right? But yeah. So, there's people that aren't really looking at stuff are going to get freaked out by the big drop. Again, if you've been paying attention to what I talk about, if you're in there in the academy with us, in the trading academy with us, you know that we're hitting targets that we were looking for as it was. We left some potential upside if it broke out higher, but we're really looking for that breakdown, which we're actually getting. So that's good. It needs a reset. If you think about gold's been, ever since the $2,000 breakout, guys, that thing's been pumping, right? You need these little pullbacks along the way. It doesn't just go straight up forever, right? By the way, the 10-year is below 4% now. And that's important, right? We do have debts maturing. The government does this year. So you want that, and they were financed at much lower interest rates. So you want these interest rates, the 10-year to come down a lot more if you can, because it makes it, cheaper when you refinance that debt. And a lot of people are going to be upset about what Trump's doing right now, but I think you have to look at the bigger picture, right? I almost put a tweet out about it, but I thought better of it. But really, market participants over the last kind of few decades really are indistinguishable from drug addicts, right? I mean, if a market participant were actually a drug addict, it would, the liquidity that governments are putting into the market, into the economies, which end up excess liquidity that enters the markets, right, and push prices up. It's the same thing as a drug addict, on hookers and blow, right? The hookers and blow part is the reason why I didn't actually post that online. Seriously, I typed it all out on Twitter and I said, nah, maybe I won't post that. But here I am saying it out loud. But think about it, right? They're all addicted. The market itself is basically addicted to this liquidity, this huge pump of liquidity that governments have been doing all over the world. And so market participants, as a result of that, become just, really indistinguishable from drug addicts. The same way that drug addicts look at hookers and blow, is the same way that market participants, whether they realize it or not, are looking at liquidity. And so, yeah, that's kind of where we're at, right? The good thing is, if you really learn to trade, folks, whether the market's going up or down, you'll be fine. But the problem is most, especially retail traders, they come in and they're just looking for the constant up. Now, at the end of the day, if you go all the way back in time to the beginning of the stock market, right, you'll notice one thing. Price always goes left and up, right? There are pullbacks along the way, but as I told you, it will always pay you more to be a bull than a bear, right? Bears get out there and they act cocky and they say a lot of things, but the reality of it is, as a bear, your income is limited. Your profits are limited. You can only go to zero unless you're in like a paper market like oil for the first time went to negative. But really, for all intents and purposes, you can only really go to zero. But if you're a bull and on a long enough timeline, your profit is infinite, right? It can go up forever. So, I think you need to think about that because it seems like it's become fashionable to be a bear on crypto Twitter the last couple of years. And as I've said before, crypto Twitter, especially, the thing I noticed since I came into the crypto market back in January of 2017 is that retail tends to cycle through things, right? So for a while they were into Wyckoff, for a while they were into LEWay, for a while they were into SMC by ICT, for a while they were, and really that's kind of in here still now. For a while they were into ICOs. For a while, they were into NFTs. For a while, they were into DeFi, right? And now, generally speaking, it's become cool to be a bear. But bears live on limited time, okay? And so, again, always something to kind of keep in mind if you think you want to make your personality that of a bear. You do live on borrowed time all the time. Your downside is always capped. And so when you compare that against, the bullish side, especially if you're thinking about Bitcoin, right? Because something we talk about often on Beards and Bitcoin is this idea that, and what I talk about with Gary when I talk with him, is that you should be stacking and just holding, right? It doesn't mean you can't trade some Bitcoin, but there should be a bag. Guys, listen, if you believe in the least bit about Bitcoin, you should have a bag that you don't touch, that you just add to. And this is where I always say, you know what? Go out there, start mowing some lawns or something, make some extra bucks, use that money to buy into Bitcoin. Long enough time frame, price goes up. We laugh at the idea that, these projections that maybe Bitcoin's going to hit $1 million by 2030 or whatever. I don't even know what all the crazy ones are. 7 million by 2040 or 2045 or 2035, whatever it is. But what if? A lot of people, say they believe in God and religion and whatnot, right? Believe in God and all that. And their argument always is, when somebody who doesn't says, well, what if he doesn't exist? Then you're doing all this for nothing. They say, well, what if it does? If you're that Christian, if you're that person, that religious person, you got to look at Bitcoin the same way, right? If you even think about it, if you even believe in it a little bit. Yeah, maybe it doesn't, but what if it does? Are you going to be kicking yourself in the rear end 30 years from now because you didn't? Or are you going to be, either it goes and it doesn't do anything, or it does and you've made it, right? And I'm not saying to go buy and hold, guys. I'm not going to tell you what to do. But I'm going to tell you, when I look at things, this is the way I approach it. This is the way I look at it. It's not things like Bitcoin, right? These once, I believe it truly is a once in a generation time thing. Once in a century, once in a generation type thing, right? I've been alive 50 years. I've never, in that 50 years I can think of, I don't remember anything that's had quite the potential effect that Bitcoin has. Once in a generation, once in a lifetime, once in 100 years, whatever it happens to be. So with that in mind, that's why I buy. That's why I stack. Because that's the way I look at it. And some people say, oh, but I only have $5, I only have $10. Well, what else are you going to do? See, here's the thing people get caught up in. Oh, I only have 10, or I only have $100 and Bitcoin's $83,000. I can barely get any. And then what do? They go and just blow it on either eating out or some silly mindless thing they're doing, or worse, they go and put it into some shit coin that rugs and they lose it all, right? Those of you that have been in the market for many years now, think about it. Think of how much money you put into alts, shit coins, real shit coins, right? Hoping they would go up, and you ended up getting rugged or otherwise losing all that money. And start really considering and go, man, if I had just put that into Bitcoin, not only would I not have lost it, but look how much higher, how much more it'd be worth today, right? These are just, like I'm saying, these are frameworks that we kind of use as traders and investors, and me just generally when I'm looking at life. How do I view things? How do I view my involvement in things? Are they worth some significant involvement? And if they are, then why am I not doing it? And you're like, oh, but Chris, you've made it, so of course you've got the money there to do that. Well, I wouldn't have made it to this point today if that hadn't been, the point that I'm at, if that hadn't been my mindset up to this point. It's only because that was my mindset and things like that that enabled me to get to where I am. There's, it's the way you look at the world, guys. I talk about it all the time, not just in trading, but in everything else in your life. The way you look at the world is so important. It's your mindset. Either everything's an obstacle and that's the end of it, or everything's a challenge that you can overcome. And whichever way you view that, it's going to determine how you go in life, how far you go in life. I'm not saying go open a business. I'm not saying, that you have to go buy big, but I'm saying the way in which you view the world determines how you answer these questions that I'm proposing here. Did you just compare Bitcoin to religion? No, I compared those that say that thing, right? Their analogy, their comparison, their idea, right? If you're religious, you say, oh, but what if God is real? Okay, so there's your justification for believing and adhering to whatever religious protocol that you do, right? But you can apply that to Bitcoin when you're looking and you go, well, I'm not going to do it because it's only $100 and it's $83,000, whatever. Well, and it may not do, and then I'd lose the money. But what if it does go? What if it does that thing, right? Do you want to be positioned that if it does, you can do it, or do you want to be positioned where you take that money and you blow it on hookers and blow, basically, or shit coins that you get rugged on, or whatever? Or do you believe in it enough that you're willing to take that opportunity there? Because let's face it, most of the time, you're going to lose that money anyway on something stupid. You're going to buy scratch offs, trying to get rich quick. It doesn't work, guys. So if you look at it, even if Bitcoin doesn't do that and goes to zero, okay, well, you lose your money. You're losing your money anyway with another nonsense that you do, or wasting it on eating out or something stupid like that. But at least if you're buying Bitcoin, especially again, if you believe in it somewhat, there is that possibility, opportunity that it's going to set you up, right? Be that hedge against inflation, stuff like that. Does that make sense, guys? So that's just what I'm saying, guys. Again, I'm not telling you have to do it, you have to do whatever, but I'm saying if you're approaching it going, man, I only have $50, I only have $100, and that doesn't really buy me anything in Bitcoin, so I'm going to go try and make it up on some shitcoin where I can buy 5 billion of butt wipe coin or whatever the heck it is for my $5, and then I can feel rich because I've got like such a huge number of them, which, as you know, most of those end up getting rugged anyway. So kind of the way you look at it. Does that make sense, guys? Brian says, new game. Have to take a shot every time Chris says hookers and blow. It's on my head today. I'm telling you guys, I apologize if you're offended. I don't know. Do I even apologize if you're offended? I'm not trying to offend you. If you're offended, it's really kind of on your thing, right? That's your issue, right? It's just the whole liquidity thing really is kind of at that point, if you think about it. Let me see here. Roy says, I lost $5 in meme coins. It was enough for me to stay out of memes. Love it. Love it. Fibbo says he turns 55 April 12th. Man, Fibbo, I didn't know you were that old, dude. I feel like a prepubescent child to you. You know, me at 50. Going to be 51 this year. Let me see here. Anyway, so just some thoughts, guys. Just some thoughts on how to frame things that are happening in your life, you know, for really a better life, honestly. Honestly. We get too caught up in the other side, this thing where everything is an obstacle that we can't overcome. So why even try? And we're just going to whine about it and complain about it to the rest of the world. Because that's what society does. It's what government says is okay to do. It's not your fault, right? Government, it's always somebody else's fault. But if you want a real life, something that you enjoy, take responsibility and say, yeah, okay, life didn't give me the best start. I have to fight my way through it. That's okay. Do it. It'll make you a stronger person, I promise you. But sitting there whining about it and say, oh, well, life sucks because I grew up this way or in this kind of lifestyle or whatever, and it's so terrible. I mean, you're just letting circumstances that you don't have any control over at the time control you. But you have control over what you do from this day forward. Every day you have control from what you do that day forward. And when you really take that in, I promise you, your life becomes much more vivid. The colors are brighter. The emotions are greater. Even when you don't get exactly what you think you're looking for at the time or as quickly as you want to, there's something to be said for what, you know, when you actually go after them with a plan and a purpose and structure, when you do those things, right? A system. Because you're going to be further ahead than where you were. And when you look back on that, that's a huge impact to your mental and your psychological side. A huge positive impact, okay? So, just kind of telling you the way it is. Let me see here. I'll take a dab hit every time he says it. I don't drink. You guys are a mess, man. But I love y'all. I love y'all, okay? Let me see here. So, there we go. As far as the whole jobs number, life kind of thing goes, let me get my other chart up here, and we can start looking at charts, guys. That sound all right? Y'all want to look at some charts? I think that's a yes. Let me grab some water here real quick. All right. It's going to hit me every once in a while. I'm trying to be cheerful here. Yeah, I'm going to take a look at the Russell. Yeah, I love Russell right now. Small caps. Oh, I still love them, and I'll explain them to you here in a minute. Let me see here. That was Brian asking about that. All right. So here's the big Bitcoin picture, guys. So we kind of have these two support lines here, right? And we are sitting right here on the yearly pivot right here, as well as, of course, this, you know, I've shown this so many times before. I've drawn it out here. The weekly fair value gap here we hit. For jumping out there to the monthly, look at the monthly. Stochastic RSI is already resetting and oversold. Let me see here. Really, I don't know. There's really nothing. We had this big kind of candle come down, bearish engulfing candle here in February. But notice, no expansion of volume. So when you're looking at bullish or bearish engulfing candles at the ends of trends, what you really want to see is volume accelerate with that candle. You should be kind of suspect if you have like a bearish engulfing candle at the top of a bullish trend, right? And the volume is less than the candle it's engulfing. Okay? So you should always be suspect about that. And look what happened then last month. Then we got a doji on greater volume than the bearish engulfing, almost the same volume as the top candle. So what does that tell you? Demand has showed up there. Supply right here. It was this is almost more of a demand isn't buying more than sellers are really jumping in to sell here. I mean, there is increased, when you compare it to, this sideways over here or whatever, I mean, there's some extra kind of supply coming in here. But your supply came in, look right here. Your supply came in here, here, and here as you got to the top here. Here, it's not like the supply continues to drop off. The volume continues to drop off. It's more of a demand is not showing up more than supply is really showing up. But here, where we find in support, doji candle, more volume, the previous one, more effort in this candle because there's more volume, significantly less result. You have this huge candle spread on this volume, and then you have more volume here in a very small candle spread. More effort, less result for supply. That's, you need to pay attention to that. It doesn't mean that has to be the bottom, but it means you need to be paying attention at these things, right? Does that make sense? How do you approach conflicting candle signals on different time frames? Well, in the grand scheme of things, the larger time frame always rules, right? So when you're trading, for instance, this is something I teach, our students at the academy, is that when you're trading, you should always start at a larger time frame. Figure out where your larger time frame points of interest are, your significant areas where you're likely to get reversals or targets or whatnot. And then you zoom into the smaller time frame to play the smaller time frame toward those larger time frame targets and in points of interest. No matter how you trade, whether it's Elliott wave, whether it's Wyckoff, whether it's price action and volume, whether it's SMC, whatever you're using to do, you should absolutely always trade that way. What most retail traders do is they get out there, though, and they're like, oh, I want to trade this on the 1 hour. This looks good, so I'm just going to trade the 1 hour, without any clue of really what's going on the daily. But that daily is a lot more important than that hourly. So you'll get on the hourly and you'll be like, oh my God, look, it looks like we're really doing something great here. And we're going to do this big, huge move. But you don't notice that on the daily, there's a significant point of interest there. And what happens is your hourly gets shut down at that daily point of interest, that daily time frame point of interest. And because you were only on the 1 hour, you're like, what the hell happened? This looks so good. It looked like it was going to go up. It looks so bullish here. That's one of the biggest problems when looking at charts that retail traders tend to have, is they don't understand that you absolutely have to understand your larger trend, your larger time frame points of interest before you trade on the smaller time frames. And that's why they often get caught. Does that make sense, guys? So, when we're looking at this, I mean, this is, where we're sitting at the moment here. Now we're going to see what happens. We zoom into the weekly. Here we go on the weekly. Let me see here. Again, reset down and oversold here. Still holding the same level. I've shown you this level before. Or maybe I've got it on this chart. No, I don't. But right here, notice. Well, let me do this. So we're talking about macro trends here, right? Macro trend is up. Look what happens here. Now let's zoom out. Let's kind of close this chart down a little bit more here. What does this show us here? When we pulled back over here, it was right around this 41, 42, 43 kind of area, right? That's where our support was. We came down, we broke through it, coming down through here. But when we broke back up through it, that was the indication we were heading up, and we did. What did we do? Our big sideways movements, we had it here, we had it here, and now we have it here, right? Each time, these lows were coming down at that same area. Here it did it again, same area. Here we are again, same area. And you say, oh, but Chris, look, it's bearish divergence. Yeah. And we've come down how far? We've come down from 107, 108 to 76. So it's about $30,000 down. So about 30% almost. So, realistically, you could argue that this bearish divergence here on the weekly may have been completed. The result from that may have been completed here as we come to the previous resistance as support area. So, again, there's no guarantees in trading, but we kind of look at these things, right? And we just want to see where it goes up. Now, the thing you also have to remember is on the weekly and the monthly, where you get these larger time frames, it may take multiple periods for them to play out. It's the same thing on the lower time frame, but because the lower time frames are lower, they go by faster. It's like, okay, but people get impatient. When something happens on the weekly or the monthly, the minute it happens, people are like, oh, look, that's it. Whatever it is, that's it. That happened. Versus, well, it's the weekly, so we might have to watch it for a few weeks, maybe a month or two to see if it happens. If it's monthly, maybe 3 to 5 months to get a clear, confirmation of what you think may be happening. It's the same thing on the smaller time frames, guys. Okay. So again, and when we look at this, you can count 1, 2, 3, 4, 5. We're potentially topped. Historically, Bitcoin tends to have a blow off top, other than this one time here. One time in Bitcoin's history, it didn't. Okay. Now we had a pretty good move here to go up, and we haven't actually had that yet here. We had little movements here, a lot of sideways. We're also spending a lot more time going sideways than we have. Normally, a Bitcoin bear market is about a year. And if we look here, if we look at this sideways here, well, we can go from the top there, low, right? Around 154 days, right? So that's what, 6 months? Really, if you get it from here is really where you kind of want to do it. So maybe 170, 175 days. And so, basically almost 6 months here, right? This one over here. Kind of right about there to right about, you can go here, again, about another 154 days or so. But we're looking at total sideways here before we're breaking out. And so in this case, we'd be looking closer to 240, 245 days, right? So, again, significant time here when you're looking like basically March of 24 until about October or November of 24, right? And so this is something we don't often have multiple times in Bitcoin cycle. So this is interesting. Does this mean we can continue higher? And I think there's something to be said about that. I think there's a good argument for that. That doesn't mean it's going to happen. Doesn't mean it has to happen, but it means, listen, if we're looking at that, this then becomes like a 1, 2, 3, 4 maybe here. And then this becomes a 1, 2, 3, 4, and 5 as a blow off top, right? Now here's the other thought on this. With cycles, right, when you're a cycle within a cycle kind of idea, usually you do get that blow off top, right? Because you get like a fifth wave of a fifth wave of a fifth wave kind of thing, right? So you keep having that overextension going on from the previous cycle and the lower cycles in it. And we don't have that. We don't have that at all here. This is not a blow off type top, right? This doesn't even look like this, right? It doesn't look like this. Doesn't look like this, right? So, if I'm looking at those, I'm like, okay, I think there's a good possibility that we're going to head up higher. But even right now, the movement down here, guys, this, whatever it is, around 30% or whatever, isn't even as large as the drawdown we had here, which was 33 to 34%. So those who are saying, oh, the top's got to be in right now, technically, there's really no reason to say that when we're looking at the charts. Now, further downside here, maybe give you more reason to do it. Just breaking down through this initial one, though, isn't necessarily. I would be more if we were breaking down below this other one here. That I would be more likely to say, okay, maybe that top is actually in. So again, we'll look at this and see how this plays out, right? It doesn't mean it can't, but right now we're holding at, significant support here, the yearly pivot. low volume node, dip down just prior to this previous all-time high area, which really is just kind of this whole area here, right? We had the top, the top, the top, almost equal highs here coming in here. So really it's this whole kind of area as support, which means what? That means even if we were to break down towards 69,000, it could just be a retest of this resistance as support, which would likely be what would kind of happen when you get into that mid to upper 60s. Rarely does price just break down. When you have this area that's constantly multiple big times, holding that support or that resistance area, it's very rare that you'll get us just to push right through it. Usually it holds its support, it bounces up higher, new highs coming out, and then eventually it'll come back and fall through it if it's going to do that. Okay. Any opinion on the SPX going down while Bitcoin is holding? Yeah, it's a different market. I mean, again, guys, I know it's easy to get caught up in the whole correlations thing because that's what a lot of people do online. I mean, even, professionals, right? I don't do that. And I don't do that for precisely that reason, right? Because, again, I've said this before, correlations don't tend to be absolute. When people talk about correlations, they'll say, oh, look, it's doing the same thing at this time, but then some other time it won't. Well, how does that help you out as a trader? Let me ask you that. If you can't count on a correlation to remain correlated consistently, it's just noise, right? It doesn't help you out any. Because if you expect that correlation to hold and it doesn't, well, then it hurts you as a trader or an investor, right? Does that make sense? So I don't tend to look at that. I mean, in the grand scheme of things, if the dollar is getting weaker, grand macro look, then generally we should expect that more money is going to come in, and generally risk on assets should at some point rise. But it's not a one-for-one thing. And again, I explained this. We're going to look at the DXY here. Matter of fact, we'll look at it right now. Why has Bitcoin not been, or only sometimes been correlated with Bitcoin, or with the dollar? Well, because the DXY has been sideways here, guys. You have the deviation below and the deviation above, but really this is the sideways range right here, and it's been here since when? It's been here since really since December of 22, since the bear market low of Bitcoin, right here, right? This is your sideways. Deviation to the downside, deviation to the upside, but really, for over 2 years, the DXY has just been sideways, right? Does this make sense? Does this help you guys understand this a little bit better? Seeing it? Meanwhile, what has Bitcoin done? Well, during this time, Bitcoin, again, we'll get from the same area here. Does this visual reference help you guys out any? You don't look sick. Stop dodging me. Don't make me put you in timeout, Tillman. One of my fellow beards. Look at how suave he looks in his picture there, guys. Y'all need to go comment on his profile. Texas OL61 on X. Go tell him how suave and debonair he looks on there, guys. Go blow up his DMs. He dresses better than the rest of us. But anyway, so seriously, I think this is the best way, Bernardo and anybody else that's wondering about correlations with Bitcoin and the SPX, or Bitcoin and the dollar and whatever. This is the best visual explanation. Bitcoin has been in a macro uptrend, while the DXY has been in a macro sideways. And so along this way, as you'll see, sometimes they go the same direction at the same time, but only sometimes. Most of the grand macro idea is that the DXY is just going sideways while Bitcoin's going up. And so when you look at that, and even when you look at it with the SPX, again, it's generally the same idea, though the SPX has gone more up than sideways, obviously. But it's for that same reason that we don't generally, hold to correlations like that. Now, I got a lot of hate. I got so much hate, guys. Here's where I get hate. Look at this. So those have been following me. Down here, I said this was likely the bottom, right? And we came back to it, I said, yeah, that's the bottom. Gave a 114 to 115 target, which we hit here, right? We went up to 114 and change. I did that down here in 21, summer of 21, and we hit this, September of 22, over a year later. Once we were there, I said, we'll hit the 100, but ultimately we'll head lower, down toward at least the low 90s, if not lower, depending on if this becomes an ABC or a 1-2, to get a larger ABC. So I got hate on here talking about the target here. Then I got hate down here reminding them of the target here. And then we got the move up here, and I said, okay, this looks like a flat correction. I got hate here. But look what's happening. We're doing exactly what we expect, right? So ultimately, I'm thinking we get maybe a bounce here, maybe a little bit lower, break, right around this 99, 100 area. And then we get a decent move up here again, up to maybe 104, 105. But that gets us then a 1 and a 2, and then we get a 3 and a 4 and a 5. And again, that should get us down there probably around the low 90s at least. And at that point, we kind of look at, okay, is that an ABC complete? As far as here, as I've got it labeled, A, B, and a C? Or again, does this become basically an A and a B? Oh, I'm sorry, a 1, whoops. A 1 and a 2, 3, 4, 5 gives us A, then we get us B, and then we'll have C. In that case, it would go down into the 70s, and that's a long-term look at that. So just kind of interesting way to kind of look at that, if you are. But locally, right now, I think we get this bounce here. If it goes up higher, we should get rejected around this 104, 105 area. And then we come down here, we break this. And so again, I think this is like a 3. We got a 4, we'll get a 3 and 4 and 5, and then that'll get us like a 1, and then a 2 up here. And then we head lower down there. So yeah. What about the death cross? I don't care. I don't mean that to be rude, John. John saw Bitcoin. No, I just mean it's just matter of fact. I don't care. I don't really pay a lot of attention to moving averages in general. The only one I really kind of watch on a somewhat consistent basis is the 200 MA on the daily, because generally speaking, that's like a trend indicator, right? Like macro trend indicator. But otherwise, again, inconsistencies. If you were to actually look back at all the bearish, the death crosses and all the other, and you were to look at it, you would find that it's really random whether it actually says the bottom's in or the top's in or not. What's more important is, what's going on at the price. Because remember, moving averages are lagging indicators. And so a lot of times when you get a death cross, prices already come down quite significantly. That's why you have the cross, right? And so, oftentimes, by the time you're getting that death cross, it's bottomed or nearly bottomed and looking to reverse up. And you can check it out yourself. Go back and, historically look at it. And the same thing with the golden cross. Often by the time you're hitting the golden cross, price will have already topped out. Now, this is different when you're looking at shorter, like mid trend. That's usually what you'll get, right? If you're looking mid-trend, you're getting a golden cross. It's usually a local top. Mid-trend, you're getting a death cross. It's usually a local bottom or, continuation on the way up, right? Now, it works when you get to the end of the trend. But the thing is, you never know, just by looking at that alone, if it's the end of trend or midway. So that's why I don't pay attention to it a whole lot. Because just, again, I've been doing this for 31 years this year. Across just about everything you can trade out there. And I've never seen a consistency with it. But it's one of those things that retail traders, I did it first, they get sucked into, right? This is where I say a lot of what you find online are half-truths or outright lies. most of what you do as a retail trader is retail trading. The reason why that's important to understand is if we, realize, if we understand that well over 90% of retail traders are out of the market in 3 months, right? And barely over 3% of them are profitable consistently after 3 years. And retail traders in general are trading the same way, then, maybe we shouldn't trade that way, right? Maybe these easy to find information online isn't so helpful to us. And that's just something I've come to understand over, the last 3 decades of doing this. So, again, but it's hard when you're a retail trader, you're coming and you're trying to learn, and you see this thing all the time repeated out there left and right by everybody, right? It makes it hard to go, okay, well, what else should I be doing? I mean, it's easy to get caught up and go, okay, well, that's what I should be doing. And I think that's why it's important to find somebody that's been in, multiple markets for a very long time, because they can kind of help. And it doesn't mean that they're always going to be right or that they're definitively correct every time they say something, but there is something to be said for that experience. If they've been in that long, they've been paying attention. And they've seen things over time, over cycles, multiple cycles. And they start understanding what's really working and what's not. And a lot of what you guys get into, unfortunately, as new traders, because it's free and easily available, especially online these days, is you get caught up in this nonsense stuff that doesn't help you. It ends up hurting you as a trader. That's why, at the Academy, that's why we focus on other things. We really try to, everything I do, is focused around understanding how and why markets move the way they do, and really trying to sharpen your ability to read price action and volume. Because those two things can be applied to any way you're trading, to help you understand if some signal that's potentially coming up may or may not be more or less likely to be relevant. Okay? Hopefully that makes sense. What percent of TWC are profitable? I have no clue. It's like here's the thing. It's like anything else. I can't force somebody to do the things that I tell them they need to do, right? If I tell, like you guys are sitting here listening, I'm telling you, listen, this is what you need to do. I can't force you to do it. If you don't do it, if you're not consistent with it, if you don't practice enough so you become good at it, well, that's all going to affect whether you're profitable or not, right? But what we do know is we do have multiple successful people. Andrew in here, Andrew Bennett's one of them. He was one of those guys that followed me online here, was at all these lives for a long time. Finally took the dive, jumped in. I think he did like an annual right off. And within like 10 or 11 months he was making more than enough money to pay for Christmas for him and his very large family, to pay bills, to do stuff like that. Trading part-time because, he's got a full-time job. But he came in with the right mindset and he really put in the effort. He learned it. Vince is another guy. I don't know if he's listening in right here, but I, did the same thing within about a year. We're just screaming well. And so, I invited them in to become head traders over at TWC. And that's why they do that there now. But it's like anything else. I can't promise you're going to be successful because I don't know you. I don't know if you're going to do it. And a lot of people, they'll get out there and say, oh, I did do this, I did do that. But realistically, they didn't. We like to lie to ourselves as human beings. We don't like to take responsibility for slacking or for not putting in the effort we need to put into a thing, whatever it is, right? But there are people that are successful. Alvin, he's another one. He's not in here at the moment. He's in Australia, so he's on a different time zone, but he is. We got another guy. He goes by Pimo in there. He posts all the time. You guys are going to see his charts. They're in there all the time. He does great. Jonathan is another guy in there. He started with us pretty recently, but he's been knocking out the park. We do live trading on Mondays, Tuesdays, and Thursdays right now in the mornings when the market opens. He's been kicking butt. Not just with that, but other trades as well throughout it. And, so the success is there, but it's not magically. And this is anything in life, guys. Anything you're trying to learn, don't magically assume that just because you pay to do it or you pay to learn it, that you're going to learn it. It depends on you. Are you really putting in that time and effort? Are you really practicing as you should? Especially in trading, are you following through? You can learn what I'm teaching you, But if your emotions are still there and you're not following through exactly as you need to be, you're not going to be so successful, right? But I'll be damned if I don't bust my butt trying to help you guys out. At TWC, I'm always available to answer questions, concepts, ideas. We've got a chart critique section where you can put your charts, and I'll tell you, listen, this is what I'm thinking. Here's what you did right. Here's what you may, especially in LA, what it may look better this way because of this, this, and this. Here's the things you need to watch to see how it's going to play out. Whatever. But it's like anything else. You got to get out there and put in the hours. You got to practice. And you have to practice correctly, right? Something that people really get wrong, in life is they want to learn a new skill, so they practice it, but they don't realize that they're practicing it poorly, right? They're not doing the things that they need to do as they need to do them. And they're like, oh, but I put in all these hours practicing. Yeah, but you weren't practicing correctly. You weren't, in the case of maybe trading, right? You weren't following the rules every time exactly as you should. Matter of fact, you were skipping rule number 3 consistently. Well, and so these are just things you guys have to understand, whatever you're learning in life. Again, I tell you guys so much, listen, the way that you approach trading and the things it can give you in terms of the way it changes, if you do it correctly, the way it changes your outlook in the markets will bleed over into the rest of your life. Your relationships, your job, your business, anything else you want to learn, you're going to get a better mindset and all those other things because your brain doesn't disassociate normally, right? And so if you're putting in repetitions on positive patterns and structure in your life and trading, that is necessarily going to bleed over in everything else you do in your life. And you're going to find that when you do that, that you end up having a happier, more successful life. Just some thoughts. Again, these are things that I had to learn over 30 years of doing this, but they're reality on that. Let me see here. What you got here? Here's Andrew says, the techniques that I teach helped him understand and predict the large drop we're seeing. I even posted a video about it on March 20th. Yeah. So let me see here. Roy is saying, as far as the percentage at TWC, probably says, not sure the percentage, but so far I am, and I am in TWC. I'm about a year now. Yeah, and so, again, guys, that's really where it comes to. Whether you go with me or anybody else, or you don't go with anybody at all, or you're trying to learn, you go with somebody else for something else in life that you're trying to learn. It all really boils down to you. And are you really listening? Are you really paying attention? Or are you letting the things you think of the way it should go overrun your thoughts? And then you're not really listening. You're not really paying attention. You're not practicing whatever it is you're trying to learn correctly. And most of us don't realize we're doing that. And so we get done, we're like, why did this fail? Why isn't this working? And we don't realize that we're not actually doing what we're supposed to be doing or how we're supposed to be doing it. Because it's just easier for us to just blame something else, right? I mean, unfortunately, that's the way society makes us feel. But that's no way to live your life. But I'll tell you what, if you come in there and you bust your butt and you're serious about it and you're trying and you're asking questions, I'll answer the hell out of them all day long. I'll do everything that I can to help you be successful. Because for me, it doesn't affect me and how successful you are, right? If you're more successful, well, honestly, I hope everybody that comes to TWC becomes so much infinitely more successful than I've ever been as a trader. Why? Because their success doesn't make my success any less. Doesn't affect my trading. But I can walk around with my chest out and a big smile on my face and say, yes, they learned from me. They got it and they understood. They were able to do absolutely amazing. That's a personal kind of emotional yeehaw kind of thing for me, right? Yeah, I said yeehaw. I'm in Texas. So, again, I have no problem going out of my way to help you guys as much as possible, which is also why I do these streams, right? I share a lot of the information that matters to help you be better traders. Now, whether you listen, whether you close your ears and say, oh, whatever, and that's on you. But what I do has allowed me to be successful going on 30 years now. Not at first, because I had to learn along the way. But I've been successful well over 20 years now. but I had to change my mindset as well, right? So I'm not telling you to do something that I didn't have to do. I absolutely had to do the same thing. Okay. So anyway, so yeah, there's that there. Let's get into some more charts here, guys. Bamboo, what's going on, man? I see you, brother. I see you over there. And sometimes our guys go on to do even deeper studying. Some of our guys have gone over and got certifications from Wyckoff SMI and from Wyckoff Analytics, just to get an even deeper understanding of the way those guys teach Wyckoff. And Elliott Wave certifications and whatnot. And that's great. That's absolutely fantastic. I'm glad I interested them enough in the topic that they wanted to learn as much as possible about it. So yeah, I can't promise you're going to be successful, just like I can't promise you're going to be successful doing anything in life. No matter how anybody teaches it, because it all comes down to you and the effort you put in. But as human beings, we tend to be very, we tend to say that we do things better than we do. And we tend to really downplay the things that we do poorly, just as human beings in all areas of our life, not just in trading. So what is my big takeaway here, guys? In life, if you want to go further in life overall, if you want a happier life, if you don't want to be miserable every day, it's not in the making buttloads of money, because if the rest of your emotional state and your psychological state is still stuck, you can have all the money in the world and still be miserable. You see it all the time with wealthy people. You hear it on news and stuff. So they do something, right? But if you can change your mindset, understand that even not having a ton of money, you'll still be much happier than you are at the current point. And I think that's probably the best thing about what I teach on the mental and the psychological side and the emotional side of trading. I think that's the absolute best part of it, because it does help you in your overall life be happier, be more content. And that's success, right? Success doesn't have to be making $1 million a year. Success can be, hey, listen, I'm making, $80,000 a year or whatever. My bills are paid. I'm fine, but I'm happy too. I'm not stressed out and hating life and miserable. Does that make sense, guys? Let me see here. Look at Bamboo. See, I love Bamboo because he's like me. He's like, man, listen, once he started getting there and really learning, he wanted to learn more, right? That's what happened to me. I became a student of the market. And he says so Bamboo came in, learned everything I was teaching. Then he went on and got a Wyckoff certificate from one of those ones I mentioned. And then he went into a really deep dive of SMC by ICT, right? Smart money concepts. He says, and now he's adding cycle theory. So, I mean, this is the stuff, guys. Are you a real kind of lifelong learner, or do you just hope that you can learn something for this little bit? But even if it's the latter, as long as you learn it, as long as you really learn it and you put in the effort to really make the most out of it, you'll be all right. Whether that's with me or somebody else, guys, you'll be just fine if you can do that. But if your mindset is not where it needs to be, it doesn't matter who you choose or how much they charge or don't charge. You won't click. Okay, does that make sense? So anyway, yeah, let's jump in some other charts here real quick. So there's the dollars. I'm still thinking there. I told you we'd look at the Russell here. This is the futures RTY. Look at this. Look at this. Look at that. What do you notice right here on the daily, folks? What do you notice? I just pointed to it. Bullish divergence on the daily here, deep in oversold. Capitulation candles the last 2 days. Look at the volume. Capitulation that candles are right around 78.6%. I'm looking at this as a flat correction. 1, 2, 3, 4, 5. So I'm looking for, today's probably getting kind of late, maybe beginning next week. We should, if this is what this is, and this is a descending wedge, and this is a throw under, we should have a pretty strong move back up into the wedge next week. And so, yeah, again, looking quite interesting at the moment. We'll see how things play out. I'm definitely not hating it. On that weekly is about to close and oversold on the RSI. And we can also look right here. I'll draw it on here and then you can see it. Right here. So from this swing low over here, right, to this over here, we've got higher lows here, but we've got lower lows here. So hidden bullish divergence, which means continuation of the trend, right? On the weekly. Let me see how this works as far as the monthly goes here. Do we have it on the monthly? Well, we have it right now on the monthly here to here, but especially from here to here. Let me see here. Yeah. So again, from the same low here to this low, we have higher lows on price. We have lower lows here. Oh, no, we don't. We don't have lower lows here. May not work, but this is the monthly anyway. It's just the beginning of the month. We'd still have to wait till the end of the month to check it out. But the weekly is definitely showing that coming up there. So, you know, if we can have like this week down here and then next week have a nice big candle that closes back above the yearly S1 pivot here at, let me see here. Oh, there we go. At 1944.6. If we can get next week to close back up above that, we will consider the S1 pivot to have held this support down right here and right back up. And that's a strong reversal. That's a big reversal. Big candle down, big candle back up. That's a strong reversal. That should indicate that we're going to break out to new all-time highs here again. So that's kind of where I'm looking at it with the Russell there. So you guys know, if you've been watching, I talked about this low here. I was looking at this, talking about this as this was building as a potential accumulation structure here. And then right over here, right around this area, this was the end of October 2023. Those of you that were around know that I was talking about this. But I said it looks like, you know, we'll get a dip below, which we did get. And then we got the move back up. You know, I said to point a spring here, to print a spring. And that's what we got. And I said, hey, okay, we're looking up. We're going to break out new all-time highs. We did. You know, again, we got the setup here heading up. So it was a good run off there. We made a lot of money on that. Now we're just looking to see if we can get this to continue to get this reversal here and head up. And that should really look good. So Bamboo says, just master one technique and you're good to go. But after that, the thirst for more knowledge will come by itself. Yeah, exactly. Y'all don't need 57 techniques. You need one. But the problem is, as retail traders, what you do, because I did it when I was first in, is you're always looking for that one strategy, that one technique that's going to make you money. It's always it, right? But the reality is that isn't the way it works. The reality is you're not actually taking the time to master any technique you're learning. You kind of half-ass it. I can say that because that's what I did at the beginning. But learn one, master one. It's all you need. And you don't have to make it very, very complicated. Now, at TWC, we teach a lot, right? Because I'm trying to get you to understand how markets move the way they do and how to forecast that. And in the time, you know, we teach you Elliott Wave, we teach you Wyckoff, we teach you some of the best SMC, smart money concept techniques. And I focus a lot on price action and volume through all of them because I want you to see that the way in which it works and market structure and all that, they're all related. They're all interrelated, the way that we can get those targets. And that's why they often get to the same target areas. And so once you get into it, and once that clicks, then you really go to the price action and volume and clicking on that, because then you understand that's really, at the end of the day, that market structure is really all that matters. But if you want to learn to forecast, well, that's based on human action, right? Human emotions, the way that we do things. And Elliott wave is great for that. Yes, Elliott wave, you can make it say whatever you want. Just like anything else, you can read it any way you want. That is the dumbest comeback I've ever heard. Oh, but you can make it whatever. Yeah, just like anything else in life. But if you do it correctly, then at least you have the opportunity to potentially get a correct outcome out of it. All right. Anyway, let's see here. So there's that. There's that. Silver. Look at that big pullback on silver. Look at that weekly pullback, guys. This is what I've got for my silver count right now. This week, we are down 17% right now this week. I think this is a flat correction. ABC down, ABC or WXY up, and then you get your sharp move down, becomes 5 waves for wave C. Minimally should target the wave A low here. So it looks capitulation, large candle, large volume, but we're not reset here, so it could still come down lower. But right here at this pivot, 2876, that's the first target area. That's where you start looking. You start watching to see if it holds up. If it drops down lower, we look at the 50% here at about 2781. Lower gets us this. Now, this isn't important. We may actually get down to the 61.8, which is 2631. It's right here in the middle of this low volume node. Basically, you see where it broke out here? This area right here. We could see it coming down there. Well, then there's this, little bit of demand structure here and here, but that would be an interesting area to get it. By the way, does this not somewhat, this right here and this move up, not look a lot like, see here, this one right here? Well, pull back. Well, pull back. So what I'm saying here on silver with this pullback into this kind of area is the same thing we could potentially see here, getting us down to that 69,000. I'm not saying it's going to happen, but I'm saying it's possible. But it would follow the same thing that I just said here, which is we're just pulling back to that previous strong area of resistance that we broke out of, tested as support before heading back up. So, I would look again around 2876, around 2781, and then right here around 2631. Those would be my initial kind of target areas that I would look for on this pullback. And again, I do think that's a flat correction, which means, based on kind of this pullback to the pivot here, we would have a wave 5 of 3 right around $41. And if my count's correct, then we would have a wave 5 potentially up here around $48, almost $50, guys, which means what? Previous all-time high, April of 2011, up here at 49.82. So there's some potential in that, but you want to look. If you're not in yet, I would tell you to watch those levels. Hopefully you know how to look for reversals on a lower time frame. And then, that's what you do. You zoom into a lower time frame, 4-hour daily, something like that, and look for potential reversals developing on those lower time frames to get in for that next move up. Does that make sense? Let me see here. Adam, check out Adam on the daily. I don't know. Let me find another. I think I've got my other charts here. Give me a minute. Adam on the daily. Where is it? Well, while I'm here, let me throw in my my oil chart real quick. There's my oil chart. And so the targets we had to the downside were initial target of 61.30, and then a secondary target of $60. And so we came in right between them. This oil drop here. Big picture. Let me zoom out a bit here. This is the big picture. So I'm thinking we have an A, a B, and then a leading diagonal as 1 of wave C. So we get a 1, we'll get a 2, and then we'll get a 3, 4, 5. Minimally down here around low 40s, but potentially could drop down here maybe mid 30s down here as well. It's potential. But that's my my oil chart there. And so like I told you, it hit our target areas, which is right here around the S1 pivot. So maybe complete, maybe push down a little bit lower before it's complete, and then up. So we'll have some rally up here a bit. Maybe up here even to around $75, $80. Maybe that high. And then that would be, again, a 1 and a 2, and then we'd have 3, 4, 5 still coming down here on oil. Let me see. And then you said Adam USD. I was talking about Adam yesterday in the market update, didn't I? Last night? I think I did. Oh, yeah. Look at you guys. You guys are going to get my chart from that I gave our our students. So this is what I've been talking about on Adam. The idea that we got this pullback into, I think that's a, whoops. Yeah, daily fair value gap here, hitting right above it. And potentially we get, looks like 1, 2, 3, 4, 5, and then A, B, 1, 2, 3, 4, 5. So a flat correction. And so off that, this 1 and this 2, got it all the way over here. That gives us a minimum expected wave 3 target up here, about $7.87. Locally, right here, you can see we've got a 1 and a 2. Wave 3 around the 1618. Wave 4 just shy of the 38.2 at 100%. Wave 5 just beyond the 200% here. Breaking out above that wave B, which should indicate that we're going to head up higher. But right now, I think that's just about topped out. So we're going to want to look for a pullback if we can get a confirmation of a top here. Pullback about 50% is our initial target. And that would give us a 1 and a 2. And then we go 3, 4, 5 heading up. But big picture, this wave 3 would potentially be up here around $7.87. Let me see. If we're going to pull back here, if this was to be the actual top where we're at the moment, today's swing high, 50% would get us right here around $4.60. Right here. So, right below, right before this low volume node area, right as we get to this support resistance area right here, right where we got with the breakout here, where we come back basically and retest that area. So, you have your selling climax, your automatic rally, your secondary test. You get your move up in phase B, you get your drop down into your spring. And you'll notice the spring volume was much, much heavier than the selling climax volume down here, which meant you had to do a pullback to do a test, lower, higher low, much less volume than what you had on your spring. Successful test, boom, jump across the creek, show of strength, back up the edge of the creek, show of strength again. So when you're using Wyckoff, nice play there, looks pretty good. But expecting it to be topped out pretty soon and getting that pullback, probably at least around $4.60 before we go up. Does that make sense? So that's kind of where I'm looking at on that. Man, it is 12:30 already. So, again, big picture today really was to get you guys to kind of zoom out a bit and see where we're at, because we're at that point of peak freaking out. And usually when you get to that area, that denotes a bottom. When people kind of get to that point where everybody says, oh, that's the end of it, that's the end, blah, blah, blah. Remember, markets don't top out on bad news. Okay? Markets top out on good news. Markets bottom not on bad news. They bought, or not on, what am I trying to say? Not on good news. They bottom on bad news, right? Because people seem to think that they tend to think, oh, there's bad news coming in, so that's the top. Well, that isn't the way it generally works. No. Markets continue because it's the excitement, right? Yeah. So just another way to kind of look at that, everything there. All right. But anyway, that'll be it, guys. So big kind of macro look here. Show you the small. And by the way, the Russell is important because that's small caps, right? Which means they're generally more affected by things that are going on locally in the US. Interest rates, tariff stuff, all that kind of stuff. So if you see these things coming on there and people talking really badly on, online on these where, oh, it's so terrible, blah, blah, blah. But you see the Russell kind of going up, that should be an indication that, oh my gosh, it's not as bad as these people are making it seem at this point. Because if it were, generally speaking, your small caps would be taking huge hits consistently, right? So, again, we'll see how this all plays out, but just some different ways to kind of look at it from the macro wise. Oil, like I said, I think it's at the low or potentially just about there. So we should have some, probably a few weeks of up movement toward that $70, $75 maybe even before we start further down. DXY, a little bit further down, I think we'll break the 100, head into the 99s, and then bottom out with wave one. Have a move back up to 104, 105 probably, and then we'll get wave two down. So again, mirroring what you've seen with oil, right? Bitcoin, we need to see some movement. I'll tell you right now, what do we need to see on before I leave here? What do we need to see on Bitcoin? We need to see a breakout above 88.5. Right now, that's the thing. Now, locally here, I have this yellow block, right? So this swing low here on Binance, on Bitcoin USDT, at 81,211.24, or the swing high here at 84,720. If we break out to the swing high, it'll mean that we're strongly likely to break out. Nothing's guaranteed, but to break out above this 88.5. If instead we don't break out there, but we break down below that swing low here, that increases the odds quite a bit that we'll probably break down below 76.6 and maybe head towards 73 or 69. No guarantees though, but it does increase those odds. Really, what you need to do, guys, at the end of the day, what we need is a breakout above 95,000. I've talked about this so many times. This is bearish market structure. High, low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low. We're in limbo right now between the last lower high at 95,000 and the last lower low here at 76,606. So if we break out through that last lower high, that breaks this bearish market structure. And the odds are significant that we're going to break out to a new all-time high. They don't have to, but the odds are increased significantly at that point. So at the end of the day, if you're wondering what Bitcoin's doing, if it doesn't break down below 76 and we break out above 95, most likely we're breaking out to a new all-time high. Forget what everybody else is saying online. That's market structure. Does that make sense? So you can simplify it down like that. Everything else aside, order blocks and fair value gaps here and support lines and wedges and all that. Throw it out there. All you need to break out above here, this last lower high on the way down, to significantly increase the likelihood that we're going to break out to a new all-time high. Okay? But remember, the only thing you control is how much you lose, right? That's absolutely it. Because the only guarantee in trading is that you will lose money from time to time, no matter how long you've been doing this. That is a given. And the newer you are, the more money you're going to lose and the more often you're going to lose it because you haven't learned the things I talk about all the time here. You haven't gotten them down yet. You haven't understood them yet. So you are going to lose a lot more money a lot more often the newer you are. But the sooner you start paying attention about a lot of this stuff I'm talking about, especially the emotional, psychological side of it, and the importance of risk management and proper trading, and trying to understand yourself as a trader or investor, and just as a human being, really. The more you do that, the greater the positive impact you're going to have on your trading. Okay? Because it's what you control. You don't control whether price is going to go up or down or how far it'll go. You have absolutely no control. I don't have control over that. All you have control over is how you act or react. Whether you use proper risk management or not, whether you do it consistently or not. Those are the only things that you control. That's it. So that's your tool set. You're coming into a thing, right, the market, of which you have no control over anything in it other than those things, which are all about you. I say it all the time. Market is about losing. So you need to approach a trade or an investment with this idea of how much am I willing to lose if I'm wrong, versus in your mind, oh my God, when this is right, because obviously it's going to be right. I'm all excited. I'm emotional. When it's right, I'll be able to buy an island. I bought this shitcoin. It's going to go up 10,000 times over the next week. And my $100 is going to become 17 million. Right? I mean, admit it. You've been there, right? It's hard not to be there today, especially if you're online with social media and all that kind of nonsense that goes out there. But if you approach a trade with how much am I really willing to lose if I'm wrong, that starts you on the path to being more serious about your risk management. And proper risk management is the end all be all of trading, guys. It's not some secret system. It's not some concept of how to make money on the trade. It's how not to lose your butt, how to stay in the game. That's what it's about. Okay? Just market buy Bitcoin for 1 trillion. Be very grateful, and everybody in TWC would shout out a huge yeehaw. Hey, you guys are a mess. Hey, listen, do me a favor, guys. Head over to forknations.com. Jump in there. Join the email list there so I can let you know when it's live here. It'll be sometime this weekend. We'll have the websites up and the socials up and everything. Really excited about this project. I've got 2 more projects coming out later this year as well. I've kind of teased it a bit. So this is the protocol universe. I've got the Penthos universe, which is going to be trading based. It's going to be kind of like a Squid Games thing vibe. If you like that sort of thing, you'll really love it. And like everything, that's related to Bitcoin in the protocol universe adheres strictly to what Bitcoin can really do and really not. And really follows along with the ideas that Lowry starts exploring in software. Just like that does it for protocol. In Penthos, it's about an underground trading market, basically, that really, controls the one that we all use. It basically, if you've ever felt like, man, the market's messing with me, it's manipulating me and all this stuff, you're going to love it. But everything in there, if you go and read through that and the stories that are in there and the books and everything, and you don't know how markets work in real life, if you're paying attention, you're going to learn, because everything is mirrored in that universe just with its own stuff. So energy markets, credit markets, debt markets, debt markets, interest rates, all that kind of stuff, geopolitical stuff, all in that. And I've got one other, and that first one should release, I believe, in September. But I'll give you guys a heads up about that as well. And then I've got one more universe that I've been writing for. Listen, guys, if you ever want to become a writer, let me tell you this. The best thing you can do, don't think about a single book. Most people get into writing and they're like, oh, I've got this book idea. Well, that's great. But you need to build a universe. You need to build a whole thing with characters, an underlying philosophy that's the spine of the entire universe, of which everything's derived off of. Okay? You need to do that. And the second thing is, honestly, do it about something that you care about. For me, Bitcoin. For me, trading. And for me, masculinity. Right? And that's my third one, is this dystopian eco-thriller universe. And instead of being female lead, where everything's, feminine, and you kind of, you got to live with your guilt, and you got to do all this, it's about men not being kept down by the way things are. Not about them conquering, but about them working through it and growing as men. So, that's what that one will be based around. So it's 3 things that really affect me personally. And I've enjoyed writing for all 3 of them. And I think you guys are going to be blown away if you're into any of that. So, Bitcoin children's books? No, it's not. Are you saying I should create Bitcoin children's books? Is that what you're saying? Oh, that's interesting. That's interesting. If that's what you're saying, I'm going to have to give that some thought. I'll bet you I can have a little children's book entry into the protocol universe. Yeah, because really, again, everything, they're great novels and great stories written, action-oriented, whatnot, or thinking or philosophical real things, but they're always based on the basic tenets of Bitcoin. the ideas of sovereignty, the ideas of decentralization. Those things, those are the philosophies, the guiding through behind the whole universe, and everything's written in it. So, yeah. But anyway, hopefully I've excited you guys enough to at least check it out. You don't have to buy anything at all ever. You don't have to join the free tier. We're going to have a free tier where we're going to give out, monthly. I'll be posting free excerpts and free stories and whatnot that you can check out. But yeah, I think you guys will love it. If you love these things, we're going to treat you like real people instead of idiots, right? That's what it should be about. Anyway, forkednations.com, guys. Head over there. Love y'all. Thank you so much for joining in. As always, remember, the only thing you control is how much you lose. So please keep working on that risk management. And hey, if you decide that you want to really learn and you're ready to learn how to trade and whatever, I don't think there's any more deeper, wider way to learn than through TWC. And so you can do that at texaswestcapital.com. You can join us in there. Join it for a month. Decide if you like us or not. If you don't, I understand. It's not for everybody. And no harm, no harm, no foul. It's easy to cancel. You can just go cancel. You don't have to talk to me or anything. And I'm not going to sit there and try and force you to stay, convince you. But try it out. See if you like it. A lot of the people that you've seen talking on here are actually in TWC. They're really great people. One of the best things that I've been able to do with this company is just the wonderful freaking people that I've met. And I'm going to tell you guys, that's freaking cool as hell. Okay. So Roy, you're saying I should get, Roy, I'm going to take that into consideration, man. I'm going to see what I can do. I'll bet you I can pop out a couple of children's books. That's a really cool idea, man. And get them just to explore the basic concepts of Bitcoin, right? At first, and then get more into the Bitcoin itself. I love that. All right, guys. Hey, listen, I'm out of here. Thank you so much for joining and spending some of your time with me. I really appreciate you. Hit the thumbs up, hit the like, leave a comment, share the link, please. Do all that so more people can come in here. I know a lot of y'all are watching from X versus YouTube anymore because, well, it's easy to do. So especially if you're on X, just retweet the link if you could. I would appreciate that. And all right, guys, that'll be it. You have a great weekend. Trade safe. I think we've got some sort of decent move up coming, next week. So we'll see if we can get that follow through based on these charts that I'm talking about. Okay. Now that everybody's all freaked out at the end of the week. Freaking out, man. All right. Y'all take care. And I'll see you on Wednesday. Beards and Bitcoin, 11 a.m. Central, 12 p.m. Eastern. Be there or be obtuse. Maybe. I want to be square.